Modi Ginani Miller approach or approach, they have written the assumptions. I'll come to that, but before assumptions, I had explained to you the crux of their argument or the main or summary of their argument, and their hypothesis, like their hypothesis on capital structure. Similarly, their hypothesis on dividend decision is also based on these four assumptions. Assumptions are self-explanatory. In case you need some clarification on the assumptions which are written on the board, on the slide, you can seek a clarification. The assumptions written on the slide, do you require any explanation on any of these 4 points, or all these 4 points are clear to you?
Sir, the fourth point.
There are, okay, 4th point. Do you have any idea what is flotation cost or transaction cost?
No, sir.
Okay, that is why you want a clarification. Correct. When a company issues a share, it receives money in the form of inflow, but before it does so, it has to incur some cost, like cost of advertisement. See, when it comes up for the issue of share, you must be seeing regularly advertisement in the newspaper or TV channels, or in various sources, in various media, electronic or print and all. Also, it engages some financial institutions, and it also pays some commission to them, some remuneration to them, which we call as underwriters commission. So it company, while issuing fresh shares, it incurs some cost. That cost you call as flotation cost. Is this clear?
Yes, sir.
So flotation cost or transaction cost is the money that company incurs in engaging the people who will facilitate its issue of shares. So what assumes that there are no flotation cost or no transaction cost. Number one, they assume that capital market is perfect. Number two is they assume investors behave rationally. Number three, they assume there is no insider trading. See, the third one stems from the first. If the market is perfect, so naturally everybody will have same information at the same time. Nobody will have a privileged information. Nobody will have more information than others. In reality, while explaining to you this one, I explained to you that at times some people have more information than others. Can you recall some example that I gave you at that time?
Sir, Rajat Gupta.
Rajat Gupta, he had more information about, additional information about which company?
Goldman Sachs.
Goldman Sachs. Correct. So try to remember. Fine. So this is what their assumptions are. Based on that, they say it is irrelevant theory or theory of irrelevance. Further, 4 I listed there. There are more, that no investor is large enough to affect the market price of the share. Is this clear? See, they say this is their assumption. A single investor cannot influence the market price. In reality, in private firms, it does not happen that much, but in public sector firms, it may happen. Because in public sector firms, only one shareholder has at least 51% influence, which in private companies does not happen. The maximum holding could be 7%, 8%, except in case of Wipro. In case of Azim Premji, his holding was somewhere close to 60, 65 or 68%. Otherwise, in private sector companies, the holdings are so wide, 1%, 2%, 1.5%, 0.01, like this. So no investor naturally will be large enough to influence the market. In case of public sector, the government may have 80%, 60%, 70%, and there just one decision of government will change whatever they want, which in private sector does not happen. It is in the context of MM hypothesis, in the context of Modigliani and Miller hypothesis of irrelevance, we can say that this is the assumption that no investor is large enough.
Sir, why is Wipro an exception?
Because Wipro, Azim Premji had too much of holding of his shares in his company. It's not by law, it is by the kind of investing pattern that they have. See, when Wipro went public, it itself has of its own 65-70%. So it raised from the market 70-30%. Like, if for example there are 100 shares in Wipro, Azim Premji and his family hold 65 shares. But this pattern in other companies, or this type of holding other companies, is not so. If we talk about Reliance, Mukesh Ambani, 7%, 8%, 9%. Similarly, in several private sector banks, private sector companies, the ownership of this owner, or the holding of owner, is, let us say, 10%. But remaining is so widely distributed, so widely held, that it's not closely held, so widely held, then one shareholder is not powerful enough to influence the market. Suppose somebody is holding 10% and others are holding 0.0002%. So naturally, one who is holding 0.00, let us put another 10 zeros and then 2%, will not be able to influence the decision. If there are 1 crore shares, somebody is holding 1 lakh and others are holding 1, 2, 3, 10, 11, 1, 2, 5, 7, 9, 10. So compare 1 lakh with 3 shares, 1 lakh with 100 shares, 1 lakh with 200 shares. So this is in the context that no investor is large enough to influence the market price of the share. So there are either no taxes or no difference in the tax rate applicable to dividend and capital gain. Whatever taxes are applied for normal, similarly same rate is applicable to a dividend also. And the firm has fixed investment policy and riskiness is almost absent. Although later on, when they refined their calculations, they dropped it. So having understood these assumptions, they have argued, this is what I have written finally in this slide, that their argument is that whatever is the increase in the value of a firm because of the payment of dividend will be exactly offset by the decline in the market price of share because of external financing, and there will be no change in the wealth of shareholders. So this theory or this hypothesis is just opposite to what we learned in our last class. I'll take up further issues if this theory is clear. The dividend decisions are irrelevant. Earlier, we concluded that dividend decisions were relevant. This time, the conclusion is that dividend decisions are not relevant. Have you all entered your roll number exactly the way I wanted you to enter in the chat box? If
Yes,
not,
sir. Yes, sir.
If not, those of you who have not, kindly enter it. It takes a lot of time when you start writing your roll number in a different format. I sort it out and then I try to transfer it to the register. It takes some time, even an hour. If I start calling your names, your 5 minutes, 6-7 minutes will be wasted. In order to facilitate this, I am prepared to spend extra time, but not too much. Somebody writing I, somebody is writing IB, somebody is writing MBA, somebody a lot of variety. I requested you that follow a specific pattern and write in that only. Say M very clear stands for MBA, H stands for MHA, B stands for banking, and I stand for international business. So do write the way I have requested you. So shall I proceed to the discussion on the next part of our irrelevance theory? Now, this is an example, nothing more. It's again example. Now, further thing in this respect is to know about other aspects of dividend theory. For example, there are various forms in which dividend can be paid. I'll cover that in the subsequent slide. Then what are the factors which determine the dividend policy? Like what are the determinants you can call of dividend policy. What are the considerations before which company decide should it pay or should it not pay? Not merely the Walters formula. Walters formula is a mathematical derivation that suggests, but there are a lot of practical considerations also. So what are those considerations which dictate a company, which helps a company decide whether dividend should be paid or not? Then forms of dividend, then there are effects of paying different forms of dividend. So all those parts I'll be covering in the remaining another 15-20 slides. Like I'll be talking about what are legal, contractual and internal constraint of paying dividend. There are rules I'll be covering. Then what is the magnitude and training of details of it all I'll be providing to you. Then further it continues, like the factors or determinants of a dividend policy. Each one I'll take up. So let me start with the first one: legal, contractual and internal constraints. At times when company issues shares, so the board passes a resolution that this much dividend is to be paid or not to be paid, or there has been a contract that is signed between the two. So if there are contractual obligations, so before paying dividend, those contractual obligations are to be honored. Only thereafter you can pay the dividend. Similarly, there are certain provisions in the Companies Act, earlier one of 1956 and the recent one 2013. There are provisions that dividend cannot be paid unless depreciation has been accounted for and profit calculated only after providing for depreciation. Suppose company does not provide depreciation, what will happen? Profitability shown in the profit loss account will be more or less?
More.
The profitability will be more.
Profit will be more. If profitability is more, it will pay more taxes and shareholders will expect more dividend also. Suppose it pays more dividend, what will happen? What will be the consequences?
The retained earnings will reduce.
Further, what will be other consequences? See, more importantly, why is it compulsory? Why is it necessary to provide for depreciation before calculation of profit and before paying dividend? Is in order to misguide the shareholders. Company, suppose it does not provide for depreciation. So after 5-6 years or whatever number of years, what will happen to its machinery, furniture and other fixed assets? They will be of no use. Where will money come from for financing these? The company will abruptly come to an end. Therefore, law safeguards the interest of minority shareholders, the interest of those who are not large enough to influence the decision. Law safeguards their interest. Unless you are sure of doing all these things, don't pay a dividend. So therefore, they have to make a provision for a depreciation, then only do this. Magnitude and trend of earning. If the earnings are more and also the trend shows increasing earnings year after year, then company can pay more dividend, and if the trend is otherwise, company can pay less dividend. Type of shareholders, it plays a very important role. If majority of the shareholders are such, types of shareholder I am explaining, if majority of the shareholders are such who do not need a dividend as such, means they have got income from other sources and their bread and butter is not dependent solely on dividend, then the company may not pay. Even if it does not pay, they will not be bothered. Contrary to this, if there are shareholders whose bread and butter, who wish to consider dividend as their supplementary income, if majority of them wants, then company has no choice but to pay. You remember I gave you a question that assume a person of your choice and see how will he think about his KE. You remember that question?
Yes, sir. Yes,
Yes,
sir.
sir.
Yes. Which very few of you could correctly answer. See, if majority of shareholders are such who have invested in the company instead of investing in a bank for a regular secondary income or for regularly the only income, then naturally if the company does not pay, they will be in a problem. Where will they get money from to buy their daily needs? Therefore, if such holdings are there, such shareholders are a company will pay. And if the shareholders are such who are investing for the purpose of long-term investment, they will require money after 10, 15 years. They have invested and they have forgotten. Then company may not. So types of shareholders also play an important role. I'll have a break at about 7:45, before 7:40 maybe, or 7:35 and 40 before we start another class. We'll be a break of about 5-7 minutes. I'm just reminding you in advance. So nature of industry. If in the industry every firm is paying dividend and this particular company, any company does not pay, then there will be problem. And if the company follows what is happening in the industry, there will be no problem. Why do you think this is relevant? The nature of industry. A firm is independent, or a firm to some extent is dependent on what is happening in the industry also.
Sir, it is dependent on others
Because
because of the competition.
Because I'll tell you the reason. When the people build their portfolio, they have, in order to diversify it, they have a stock from various firms. Some percentage of their portfolio from tech firms, some from construction firms, some from FMCG, some from, like this. So if they are holding some shares from IT also, and in IT industry there are 10 firms, 9 are paying and 1 is not. So naturally they will be looking down the stock of that company. Therefore, the industry profile or the happenings of the industry are also to be taken into account. Then age of the company. If company is young enough, then it may retain earning for its growth. And if the company is aged, has enjoyed a lot of reputation in the market, it can easily raise money from various other sources. Relatively to a younger company, it's expensive also, because unless people know, unless its credential are established, it cannot get a cheaper money from the market. But an established company can get money very cheap in the market. If it wants to issue a share of rupees 10, it can ask for a premium of 200 even, and people will pay. But if a newly established company wishes to issue a share of rupees 10, it cannot command a premium of 200, 300 rupees on a share of rupees 10. Then owners' considerations also play an important role. When we say owners, we are saying those who are holding majority shares, whose decision ultimately prevails. So the factors continue. Future financial requirements. If the company has several projects lined up, then it may not pay dividend. If there are no good projects in the offing or in the near future, then it may skip. It can pay the entire money as dividend. Capital market considerations are the same as we talked about the industry. This thing, if the market is such where there are no problems, money can be easily raised. There is no recession or seem to be recession or likely recession. A company can pay because it can raise money. But if the market seems quite difficult, people do not have faith in the market, people are not buying a lot, then it should use its retained earning only for the financing and should not pay more dividend. Dividend payout ratio also at times company, I think it has been covered later also. Yes, is this one dividend payout ratio and stability of dividend can be talked about together. Sometimes company wish to maintain a fixed dividend policy that every year 20%, 25%. There are companies which do not believe in a fixed dividend policy or a stable dividend policy. So depending on the policy of company, the government can, the company can take a decision. Then government economic policy. If the economic policies are industry friendly or businessmen friendly, then paying dividend should not be a problem, because it can raise money from the market. But if it thinks that the government policies are not industry friendly and government has got a lot of issues with the industry, then it will think twice. Can you just think of, or can you just point out only one or two, let us say, factors which we can include in the government's economic policy?
Licensing.
Say a bit more louder.
So licensing.
Okay, licensing, fine. Anything else? Licensing is one, very relevant. Anything else?
No, sir.
Okay, there is a term called ease of doing business. Can you recall? Have you heard this name? You must have certainly heard this name.
Yes, sir.
This
Yes,
word,
sir.
Yes, sir.
ease of doing.
Yes, sir.
Then there are indices. Several indices are there. One of the index is ease of doing business. Where do we stand as a country in ease of doing business? In some countries, ease of doing business, there'll be an index. In that index, all those index will be ranked in order of difficulty or ease of doing business on a scale. And there are 200 countries, so all 200 will be there, right from starting 1 to 200 or 190, whatever. So 1 means the easiest, the country which has the easiest way of doing business, no hurdle at all. And the country which is on the bottom means at every stage there are hurdles. So number 1, ease of doing business based on the country. Number two, ease of doing business based on states. In India as a whole, we have an index, and within a state, not necessarily that all the states will have same level of difficulties or easiness when it comes to doing business in those states. Some states will be a bit difficult, some will be friendly, some will be not so good, and so on and so forth. So what I asked you was, where do we stand? Assuming there are 200 countries, are we below 100 or above 100? When I say below 100 means it's negative. On top, eh? Above 100?
Around 70. It
Sir,
was
around
something.
116. Around
70.
How much?
Around 116.
116. और बताइए
सर 70 के राउंड था ये बीज ऑफ रीजनिंग
कब की बात है ये?
Sir, 2020 से
60-65.
देखिए, तमाम सारी चीजें आपके कोर्स का पार्ट नहीं हो सकती ना है, लेकिन उसके बावजूद भी आपको इन सब के बारे में आपकी फिंगर टिप्स पर होना चाहिए. स्टेट वाइज कम से कम 3-4 स्टेट का मालूम हो कि ये टॉप पर हैं या बॉटम पर हैं. कंट्रीज का मालूम हो जहाँ ईज ऑफ डूइंग बिजनेस हमारे यहाँ अगर
सर
आपको
गुजरात एंड कर्नाटका में
गुजरात एंड
सबसे
yes,
ज्यादा
sir.
अच्छा, अगर आपको एक दुकान खोलनी है तो आपको कितनी जगह से लाइसेंस लेना पड़ेगा? कितने दिनों में आपकी दुकान शुरू हो सकती है? कितने दिनों में आप बिजनेस शुरू कर सकते हैं? कितने दिनों में आप कंपनी शुरू कर सकते हैं? ये सारी चीज़ें जो हैं इनकी बेसिस पर ये कैलकुलेशन किया जाता है. तो आपको इसका मालूम होना चाहिए. थोड़ा पढ़िए इसके बारे में. तो मैंने आपसे पूछा था गवर्नमेंट इकोनॉमिक पॉलिसी, एक वर्ड में कह सकते हैं ईज ऑफ डूइंग बिजनेस. इन्फ्लेशन अगर ज्यादा है तो कंपनी को डिविडेंड पे करना चाहिए, या कम है तो कंपनी को डिविडेंड पे करना चाहिए.
सर, अगर कम है तो कंपनी को पे करना
जोर से बोलिए,
चाहिए.
जोर से बोलिए.
सर, अगर इन्फ्लेशन कम है तब कंपनी को पे करना चाहिए, और ज्यादा है तो नहीं पे करना चाहिए.
ज्यादा तो नहीं पे करना चाहिए. इन्फ्लेशन ज्यादा का मतलब तो आप सबको क्लियर है ना. आपके
Yes,
10
sir.
रुपए हैं कंपनी में रिटेन अर्निंग, 3 साल बाद कितने रह जाएंगे वो अगर इन्फ्लेशन बहुत है? ज्यादा हो जाएंगे, कम हो जाएंगे?
कम हो जाएंगे अगर इन्फ्लेशन ज्यादा है तो.
बिल्कुल कम हो जाएंगे. अगर इन्फ्लेशन बिल्कुल नहीं है तो क्या होगा? वो 10 रुपए कितने रह जाएंगे?
10 ही रहेंगे.
10 ही रहेंगे. वेरी ट्रू, 10 ही रहेंगे. अब बताइए, इन्फ्लेशन ज्यादा है तो पे कर देना चाहिए, इन्फ्लेशन कम है तो पे करना चाहिए? इन्फ्लेशन अगर ज्यादा है तो पे कर देना चाहिए, इसलिए कि वरना आपका पैसे की वैल्यू ऑटोमेटिकली कम होती
कम हो जाएगी.
कम हो जाएगी. तो इसलिए इन्फ्लेशन को सामने रखते हुए भी डिविडेंड डिसीजंस, व्हाट आर वी डिस्कसिंग? वी आर डिस्कसिंग फैक्टर्स बेस्ड ऑन व्हिच मोर और लेस payment of dividend is dependent. Then requirements of, तो taxation policy हो गया, requirements of institutional investors. There are individuals who subscribe or who buy the shares of company. At the same time, there are institutions also. In a large company, not only individuals purchase but also institutions. Like कौन से institutions खरीदते हैं, जैसे कि रिलायंस में किस किस के शेयर हो सकते हैं? सॉरी बताइए. यस, फॉरेन इंस्टीट्यूशनल इन्वेस्टर हो सकते हैं. पहले इंडिया के बता दीजिए, फॉरेन बच जाइए. अभी लोकल में कौन हो सकता? देखिए बहुत कॉमन सी बात है, लोकल में बैंक्स खरीदते हैं,
Banks.
LIC खरीदती है, और यस बहुत सारे इंडियन इंस्टीट्यूशंस हैं, खास करके जैसे LIC मान लीजिए आप, वो भी अपने पैसे को इन्वेस्ट करती है. LIC टेक्स प्रीमियम फ्रॉम यू, तो आपको कैसे वो किसी भी मेच्योरिटी के ऊपर आपको कहाँ से पैसा ला के देंगे? वो if they put it in a bank, they will get peanuts. So naturally they invest. When they invest in equities, they get huge, good appreciation, and from that only they make payment to the policy holders. So institutional investors also play an important role. If they decide or if they vote you should pay more dividend, company will pay more. And if their requirements are for the payment of lesser dividend, company may pay less dividend. If they decide or if they feel they should not pay, company will not pay. Then there are control objectives. This is also an important consideration. If company thinks that paying dividend will help it controlling the company, then it will continue to pay. And if the control is at stake, then it will take a different decision. See, those who have established a company, naturally they would like the control of the company to be retained. Or would they like that someone else become the owner overnight? Nobody would like. Although there have been a few cases wherein a company was established by A, B and C, for example, but was taken over by X, Y, Z. What do we call this kind of a takeover?
Hostile takeover.
Yes, hostile takeover. Hostile takeover. Can somebody recall name of some company? Which one? ओके और बताइए. ओके और बताइए. हमारे कंट्री में हॉस्टाइल टेक ओवर की एग्जाम्पल्स हैं, बट लिमिटेड एग्जाम्पल्स हैं. इसके बारे में भी थोड़ा सा पढ़िए. इससे पहले किसके बारे में पढ़ने को बताया था मैंने आपसे?
ease of doing business.
ईज ऑफ डूइंग बिजनेस. दूसरा हॉस्टाइल टेक ओवर. चलिए, तो ये जो मैंने आपको बताया अब तक, ये कंसीडरेशन थे कि इन कंसीडरेशन को सामने रखते हुए डिविडेंड को कंपनी को पे करना होता है. उसके बाद कुछ और इसमें कॉन्सेप्ट्स हैं जिनको आपको जानना जरूरी है डिविडेंड से रिलेटेड. फॉर एग्जांपल, कंपनी मे नॉट पे डिविडेंड ओनली इन द फॉर्म ऑफ कैश, इट कैन पे इन द फॉर्म ऑफ बोनस शेयर्स. तो बोनस शेयर किसे कहते हैं? कि यू आर होल्डिंग 10 शेयर्स इन अ कंपनी. If company issues you some more shares, no, कैश नहीं. कैश डिविडेंड तो वो होता है जब आपके अकाउंट में पैसा आ जाए, that is cash dividend. You are holding 10 shares, company is paying ₹2 per share, so your share will be 20. So ₹20 will be transferred to your bank account, that is cash dividend. In case of a bonus share, you are holding 10 shares in a company and company issues you another 2 shares, let us say 10%. If you are holding 10 shares, you get 2 shares. Somebody is holding 100 shares, he gets 10 shares. Somebody is holding 1000 shares, he get additional 100 shares. If company does so, it is known as company is issuing you bonus shares. Your holding in the company is increasing. You got it? So if company is unable to pay cash dividend because of several reasons, it can satisfy shareholders by issuing bonus shares. Suppose market price of your shares are 100 just 100. And if company gives you 2 shares, so how much do you receive? In
100
effect, you have received 200 rupees, isn't it? So instead of receiving some dividend, company has paid you dividend in the form of shares. Now, what will be the meaning is clear? What will be the effect of bonus shares?
Sir, their value would increase over time, preferably.
Okay. What will happen to EPS? EPS will increase or decrease?
It will decrease, sir.
EPS will decrease.
It will
EPS will
decrease,
decrease
sir.
because there will be more number of shares. EPS will decrease. What will be the other effects? When there are more shares, then trading becomes easier. Trading becomes easier, and when more trading takes place, there is a possibility that more buy and sell, more appreciation in the price of shares. Likewise, there are several effects, some of which you can study. These are all purely theoretical. This thing, no much understanding is required. Stock split. A share of rupees 10 can be split into 2 shares of rupees 5 each. If it is done so, you call this as stock split. The meaning is that if the value of share is either halved or maybe any denomination, a share of rupees 10 can be split into 2 shares of rupees 5 each, or 5 shares of rupees 2 each. If the company is doing so, you call this as stock split. So this is the meaning. And what are the effects?
Share price will reduce.
Same thing that
Number of share will increase.
yes, number of shares will increase, and the consequences of increasing number of shares will remain the same as were there with bonus shares. Reverse stock split is just opposite. A share of rupees 10 can be combined into 2 shares of rupees 20. यानी कि 20 रुपए का एक मतलब उल्टा कर दें इसका स्टॉक स्प्लिट का. 1 share of rupees 20 instead of 2 shares of rupees 10 each. You call this as reverse stock split. Shares repurchase, also known as buyback. Owners of the company can repurchase the shares that were issued in the market, which you may call as buyback. And buyback is usually resorted to when the company senses some takeover possibilities. It wants to increase its ownership and reduce the ownership of other people. So companies may resort to buyback of shares also. So these are some of the concepts. Then I'll just spend another 5 minutes before we break, and then we'll meet after another 5-7 minutes. Dividend policy could be a regular dividend policy, fixed dividend policy. Then there can be policies wherein this dividend is not fixed. Nothing very technical about it. A payment of dividend, if a company gives or regular rate every time 7%, 10%, 15%, you call it as a regular dividend policy. When sometimes 10%, sometimes 15%, sometimes 0, sometimes 90%, it is an irregular or unusual dividend policy. There are advantages and disadvantages. They are self-explanatory. I don't think there is anything which requires explanation here. A stable dividend policy has its own merit. A stable dividend policy has certain advantages, which I think is so self-explanatory. For example, if this is established dividend policy, every year it pays 20%. So people know that at the end of the year they will get 20%. People know that they can invest this money somewhere else. It results in continuous inflows of funds for the people as a second source. And it provides livelihood to many investors, especially to those whose main source of income is a dividend only. So like this, there are certain advantages, policies, and similarly for irregular dividend, this thing. Not that important, so leave it. This part I have explained. Mode of dividend payment, yes, this can be explained. Company can pay cash dividend, company can pay you bond dividend, company can pay you property dividend, company can pay you stock dividend. Like stock means same thing like shares. So there are various ways in which company can pay dividend. Then bonus shares I have explained. If a company has huge profit and reserves its balance sheet as okay, this is if article of association permits, company can pay excess dividend also. I think these are all remaining sessions, oh sorry, remaining a portion of the slide are details only, which I have explained to you. So we'll
Sir,
be,
I have a question.
yeah, sure.
Sir, in case if a company has an authorized share capital of 1000, like 100 shares of 10 each, and
Correct.
sir, all are issued, then
Correct.
in that case, is it possible to issue bonus share
It
in the
needs,
form of dividend?
yes, it needs a permission. Further bonus shares will be issued in addition to whatever it has already issued.
Okay, sir. So
Suppose
authorized capital?
just one second. For example, it is authorized capital is 1000 shares. Correct. It has issued 800. It has issued 800. So remaining 200 will be considered as fresh issue. Bonus will be in addition to that.
Okay, sir.
And authorized capital company seeks an authorization from the government once, and at subsequent stages also, if it needs to change or it needs to increase its registered capital or authorized capital or ordinary capital, it can go for that. So we
Okay.
are leaving this discussion here. We will start a fresh topic when we meet after 5-7 minutes once again. So you may either rejoin or you may stay, do whatever wish. I'll see you in another 5-10 minutes. Just 5-7 minutes only. So that topic is complete. I'll be taking up another topic. Out of 64 of you, I think several people have left. Will they rejoin, or I don't know. I am just sharing the screen. Okay. Is the screen visible to you, this one also?
Yes, sir.
Yes,
In finance, we have got, sorry, in fifth unit, in addition to dividend decisions, there is in fact one more topic. There can be many, but in the syllabus only one has been included, that is lease financing. Lease financing. So I'll be covering this topic also today. Hopefully we will be able to complete this topic today. So with respect to lease financing, what I'll be discussing with you is the meaning, what do we understand by the term lease, and more importantly, the calculation part of it, mathematical part of it, that is when a company wishes to obtain some asset on lease, how do we calculate its rentals? How do we calculate the charges that it will pay? So before doing so, let me explain you the concept of lease itself. Suppose the company wants to have an asset. What are the options? If company wants to have an asset, you need asset. Let me write. You need an asset. You need a machinery. You need a building. You need some asset. So what do? One is you can buy. Or what else?
so we can rent.
You can take it on rent. Take it on rent. Then, or
So on credit,
sorry,
on credit,
or have it on lease. You want to buy, you want to use, you need a machine, have it on lease. Now suppose you wish to have it on lease. This is the something that we will be discussing in detail. So what does this lease become? It becomes a source of finance, isn't it? If you had money, you could have bought it, isn't it? And suppose even if you have money, but you still wish to have it on lease, how do you take a decision? All these things we shall be talking about in under this heading. So lease financing is just another method of raising money indirectly. Suppose you want to have a machine costing 10 crores and you don't have internal resources. What do? You may issue fresh equity shares. You may borrow money from bank. You may issue debentures and purchase. You may buy on credit from the supplier. You may buy it in installment. You know, there are several options, isn't it? So what we are discussing is, if we, out of all these, options, what are the implications of getting it on lease? What are the implications of financing an asset through lease will be our subject matter of discussion. How do we mathematically decide? How do we decide using facts and figures? How do we get an asset on lease? How do we make calculations? This is what will be the discussion. There are, before I explain you the mathematical part, very small, very brief theory. There are parties in lease. One party is known as lessor, is written as lesser but pronounced as lessor. So the person who finances this is known as lessor. Lessee, the person who gets asset on lease. Suppose A is owner, he has got machine, B wants to take machine on lease, so A will be lesser, B will be lessee. Now, the consideration against which A gives machine to B is known as lease rental or lease rentals. One of the words you can use. So both parties enter into an agreement, that is the lessor and lessee. They decide for how many years the asset will be given on lease. Against this, what will be the charge? Who will bear the operating expenses? Who will bear wear and tears? What will happen after the useful life of asset, and several things. So a contract is signed between these two parties, lessor and a lessee. And at the end of each month or a year, in fact it is monthly only, the rentals are paid by lessee to a lessor. So this is in brief the theory of that. Shall I move ahead now?
Yes, sir.
So leasing essentially involves divorce of ownership. When I say divorce of ownership, means A was owner, ownership will remain with him, but he will give the lesser right to use. He will use the asset. Now, when I say ownership and right to use, from the accounting point of view, what difference does it make? Does it make a difference or it does not? Is my question clear to you? I'll repeat. A is owner of an asset, that is lessor. He gives this asset to B, that is lessee. From the accounting point of view, has it made any difference or not?
Yes, sir.
It has made the difference. That is why in order to calculate, we must know its concept. Only then we will be able to make the calculations. So the main and the most important difference that it is making is that A is owner of an asset. Because of owner of an asset, he can claim depreciation on the asset. By claiming depreciation on the asset, his tax liability will be reduced. Is this clear?
Yes, sir.
What will happen to B, that is lessee? He is paying rental. He is paying lease rental, and lease rental will be considered as an expense. When you consider something as an expense, what happens? You charge in the profit loss account, and your profitability accordingly reduces, and your tax liability also reduces. Is the issue clear?
Yes, sir.
Sir, can you please repeat it once?
A is owner of an asset. He is giving it to B on lease. So A is entitled to claim depreciation. So it will affect his taxation. What will happen to B? Is he also entitled to claim depreciation or not? Can B?
No, sir.
Yes, B cannot claim depreciation. Why B cannot claim depreciation? Because B is not owner of an
The owner of
The owner of that
Owner of the
asset.
building.
Yes, it has implications on saving of taxes. For this reason,